It's a market-shaking week in the US, with US GDP out on Friday, and also the Federal Reserve will be meeting. And I've been speaking to Mike van Dulken from Accendo Markets about how these events are going to shape up. Clearly the Fed aren't going to do anything this time during this meeting on Thursday. What's your expectation for the Fed going forward? When do you expect to see some action?
Some real action I don't really foresee until potentially the end of 2014. The Fed's already guiding to 2015 for any rate changes, which, to be honest, gives them a bit of wiggle room, if you like. It's a pledge. It keeps sentiment bolstered without actually having to do anything, similarly to the ECB and their pledge to intervene in peripheral sovereign debt markets. But yeah, Wednesday we don't expect anything, although the language will be key, and especially with that big drop in unemployment rate we're seeing at the beginning of the month following the Q3 announcement. Any colour on that? We're particularly interested in the participation rate. It could be a bit of an illusion. We do get a drop in the unemployment rate, but are more people back to work? And that is key. And if they allude to whether that is a problem or whether they will still maintain their rates low for long, will be a key bit of information for us this week.
Yeah, the unemployment rate is quite interesting in the US because there are millions of people who have simply dropped out of the system and don't even show in the official stats.
That's right. When people give up, they drop off the stats, the unemployment rate technically improves.
Yeah.
Well, the number of people prepared to work, working is getting worse, and that's what the US is aiming to do. The QE3 is all about fostering economic growth, getting people back to work.
What about the US dollar? Do you expect that to continue to work as a safe haven currency? If, for example, the US GDP comes in bad on Friday, what effect will that have on the US dollar?
At the moment, it's most of the action we've seen in the dollar has been the weakening in the run-up to the QE3. So we had the huge weakening. Since then, you've actually seen the dollar strengthen versus sterling. What's interesting, sterling versus dollar or cable, is that now we've got a trade-off between the QE3, which is gone. We can't really see much more unless they increase from 40 billion extra a month to more, but unlikely for a little while. They need to give that time to work. We've also got the prospect of the Bank of England announcing more QE somewhere between now and the end of the year. So a bit of a trade-off there, but we still see that trend of falling highs in the sterling dollar continuing for a little while, and there's potential for a bit more downside there. With the euro, the interesting thing is that the euro dollar has the trade-off of the prospects of the Eurozone improving. If we do get a Spanish bailout request, technically I'd expect the Eurodollar to rally significantly, which is dollar negative. So with the US GDP, we expect the figure to be pretty much in line, not really much of a market mover. It seems to be there's more issues outside of the US which are driving the FX involving the dollar more than the dollar itself. The US is still obviously struggling. It's still stimulus dependent. But for the moment, now that the Fed has made its announcement, it's moved, it's acted, it's now, I think, going to have to sit and wait and see that their QE3 pledge, or not that their QE3 action is actually paying dividends. And I don't think that the unemployment improvement is going to be deemed to be working straight away. I think they'll want to see. It'll be interesting to see if they're after more metrics now. I mean, QE3 is explicitly unemployment linked now. Are they going to add anything more to it? Are they going to be looking for any other signs that it is helping out in the economy?
Yeah, where do you think we are in the US growth story? Because at the moment it's expected to be about 2%.
Yep.
We saw the Chinese data out last week,
yes,
and that people are saying that's pretty much bottomed out in terms of the slowdown in growth. So where are we with the US story?
I think the US, the US is still going to be almost dependent on China as well. I mean, the Chinese growth was in line, which is nice to see, and the government is alluding to it having bottomed out. In fact, I was seeing that the quarterly figures of GDP growth have actually been improving in the last 3 quarters. So us looking at that 7.4% figure, which is the annual growth, is almost, we're ignoring an improving trend. So if that is the case, that's great, and that could improve the global sentiment, which would have a knock-on to somewhere like the US. And the US growth, 2% is certainly much better than the UK, and certainly a lot better than Europe, but it's still needs a bit more work, and I think things like QE3 are still going to be needed to keep that going. So I expect that figure to be pretty much in line, and very little reaction, to be honest, from the dollar on Friday.
Let's finish off by talking about the fiscal problems in the US. There's huge budgetary issues that need to be sorted out,
Indeed.
and also there's elections on the 6th of November. Is there a political outcome to those elections which could cause major problems in sorting out the US fiscal problems?
I think that the fiscal cliff, as it's known, is going to be a problem whoever prevails at the beginning of November, and it is a real problem for the US. We're talking about a 2% GDP growth. That's fine for the moment, but if you add in tax hikes and spending cuts, it's quasi self-imposed austerity. Welcome to Europe. It's going to be a huge impact, and your 2% growth. I mean, I'm not sure what that would be dented to, but it could be quite significant. And again, that would be a serious impact on the dollar there. But also, you've got the impact of a huge drop in growth in the US. There's a huge drop in demand from the US, which is a huge drop in export-led growth from places like China. So it has a double whammy effect.
Mike van Dulken from Accendo Markets there, giving his expert insight into the major US events. Unfortunately, that's all we have time for. So from London, goodbye.